Maverick traders, welcome out to your market roundup for August 7th. Corey here with you. Let's jump right into it. So we're going to go through the broad markets. We'll talk about commodities and different things that are moving in the market. We always start with the top-down approach. We'll analyze sector heat maps, see where money is flowing out of, see where it's going into, and then finally, we'll get to some new trade ideas.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so let's get to it. And looking at the broad markets, a nice up day. All of the markets up about 1%. Oil and gold flat. Oil has been on a tear. It's at a 4-month high, but it's pulled back a little bit slightly here. And looking at the daily news, Berkshire also is in the daily news where it had an earnings beat over the weekend, and Berkshire Hathaway, run by Warren Buffett, moving sharply higher and again hitting new multi-month highs. Advanced decline line, 40% of stocks going down, 55% advancing, and the 50-period moving average still bullish at 60%, but that's actually given a little bit of ground here recently. As we take a closer look at the S&P, we've talked about this exhaustion that's been in place. And sure enough, we are in a corrective phase. We're pulling back in price. Is this just a mild correction? Is this the start of something more significant? I think the NASDAQ, the QQQ, shows it better. Here was an exhaustion, and we were able to work it off sideways. Here was another exhaustion, and we're working our way lower. So we're getting a little bit more of the ABC 1, 2, 3 type of pullback. There could be a little choppiness in here. I still anticipate that ultimately we're probably going to test a little bit lower prices before this full correction is done. That doesn't mean the bull market's done. That doesn't mean that stocks can't go higher long term. Just I think that there's a little bit more deterioration potentially coming. Now, last week I highlighted healthcare and talked about that I thought there would be some sort of rotation. And you're certainly starting to see that. These healthcare names have done really well over the past week. And the large cap tech names, the Apples of the world, are really struggling. And they're pulling the indexes down, the S&P and the NASDAQ. The reason the NASDAQ 100 looks worse than the S&P is because most stocks are still okay, but these large cap techs are a little more exhausted, and you look at Apple's chart and it's really been moving to the downside. Like we talked about, Berkshire with a big up day, up 3%, but everything else a little bit more of a mixed bag. Certainly relative strength in that healthcare sector. Now as we look at our market outlook, I tend to think there's a little bit more give back here in the short term. On a longer term scale, that markets look pretty darn solid. So are we still above most of the moving averages? Yes, we've dipped a little below the 20. That's what happens in corrections. Oftentimes that creates the next buying opportunity. Let's talk about some potential bullish, neutral, or bearish lists. Now, I'm not so much bullish on tech, but I wanted to highlight, if you want tech, I think you go to the old tech, the Intels and the Hewlett-Packards and the Dell computers of the world, Oracle and so forth. IBM as an example. You stay away from the newer tech names, the Apples, the Googles, the Microsofts of the world. I think that's where I would be. XLY, this is a sector. This is consumer discretionary. We highlighted it last week. Guess what? It's literally at almost the exact same price this week, which means although we've moved around, we are completely sideways from last week. So that is already working as an idea. And then on the bearish list, just a mixed picture, a gold miner here, a defense stock, and this is a telecom. It's a REIT, but basically they provide cell towers and so forth. We'll talk about each of those individually. So Intel, looking at this chart, we've certainly consolidated, and it's a little mini cup and handle type of pattern. I think Intel could follow IBM and some of the other older tech names in making a move to the upside and relative strength, relative outperformance compared to the others. Here's Hewlett Packard again, been in a little bit of a correction with tech in general. Tech's not my favorite sector, but I just really wanted to emphasize that if I were going to look in that space, I would avoid Apple and I would go for Hewlett Packard or Cisco or some of these types of names. Next, we talked about neutral trading in XLY. Although we traded down for a couple of days, we're back up and we're exactly flat to where we were. And this is the type of price action we expected, that ultimately we're going to chop around but finish right around here for the next few weeks. AMT, American Tower, bearish chart. You can see the support level, sort of an inverse cup and handle, or more specifically, I think it's just a descending triangle. But anyway you look at it, it looks like a ball that's bouncing on the table, and each bounce gets a little smaller until it falls off the table. So AMT has that bearish descending triangular pattern type of look. And LMT, Lockheed Martin, nothing specific about this sector or anything that way, just ultimately very heavy stock, continued deterioration here as it tries to advance, knocks it right back into the downtrend, and a plunge to new lows seems imminent in the coming weeks. So as I look at the markets, we're in this corrective phase. We talked about that we got an exhaustion. We had some bearish divergences, RSI and MACD. I don't use a lot of indicators, but those are things that I would watch for if markets are making new highs and have been overbought for an extended period. Then those divergences tend to pinpoint the reversal area pretty darn well. CPI comes out on Thursday. We know the Fed is laser focused on inflation. The Fed's two mandates are to keep full employment and to keep price stability. And the price stability side, the inflation side, is where they have erred and where they have made mistakes and what they're going to continue to battle. Alibaba, Datadog, Disney, Barrick, Eli Lilly, UPS, plenty of companies reporting earnings, still keeping you busy in the earnings front. A lot of corporations still to come, retail stocks and others that haven't reported yet. Hope you enjoyed this market roundup. Have a great rest of your night, and we will see you next time. Goodbye, everyone.